Good morning friends. Do you remember in my last video I discussed about due diligence for NGOs? Friends, that was about overall due diligence which a donor agency or any other stakeholder should undertake before partnering with any implementing NGO. Oh, you have not watched the video till now? Click the I button on the screen to know more about the topic now. Today in this video, I will be discussing specifically about financial due diligence and its importance for NGOs. Financial due diligence is an investigative analysis into the financial performance of the NGO, or rather you can say to understand the financial strength of the NGO, that is its financial situation and dependency on donations. So, in our opinion, financial due diligence is something which not only the donors should get it done before partnering, but even the NGO's management can also get it done for themselves to know its actual financial position. Sometimes it so happens that the organizations seem to be fine and compliant in all aspects, might have a good reputation among the local community and apt capacity to execute the project, but it might be in a financial mess actually, which can only be understood once its financial statements or the budgets are critically scrutinized. Here's where conducting financial due diligence becomes important. Now, what a concerned stakeholder who initiated this financial due diligence should verify and validate about the financial position of the organization and how, let us see. First and foremost is reviewing the organization's financial statements. The financial statements include the balance sheet, the income and expenditure, and the receipts and payments, along with the detailed schedules and notes on accounts. An in-depth analysis of these statements combined with the opinion of the auditor and notes annexed to the audit report will give a sense of financial viability of the organization. These should be reviewed to ensure their completeness, accuracy, transparency, and compliance with all relevant laws and regulations. The evidence and authenticity of any financial asset can also be validated through the audited financial statements. Next is evaluating the budget. The organization's budget should be evaluated to ensure that it is realistic and sustainable. The financial projections made by the organization should be achievable. In fact, during the financial due diligence process, ideally, the variance with the budget for last 3 years should also be analyzed to get a clear picture of the fund flows and the financial position of the organization. Next comes assessing financial sustainability. By financial sustainability means its ability to generate revenue and manage its resources effectively. It involves checking the organization's financial health by analyzing its liquidity, solvency, and profitability, though not purely in commercial terms, but to ensure that the organization have enough surplus and there is no warning signs of financial distress such as negative cash flows or large amount of debt. Look for any contingent liabilities which might be a potential threat on its financial in the near future. Next comes checking the legal and regulatory compliances. Verify that the organization is in compliance with all the relevant laws and regulations applicable to it. There should not be any violations or non-compliance associated with the organization under any statutes which might involve financial outflows in future. All the necessary registrations and certificates such as the tax exemption certificates, FCRA certificate and certificates under other applicable laws and regulations are valid and active. The organization should be compliant with local as well as international laws and regulations regarding financial reporting and accountability. While checking the legal and regulatory issues, special attention should be given on any fines or penalties paid by the organization in past for any mismanagement or violation. Then comes reviewing its funding sources. The funding sources, that is the other donors funding the organization, whether private companies or government agencies, should be reviewed to ensure whether the organization is being able to raise funds regularly from diverse sources and will have a stable flow of funds in the long run. Also ensure that the funding sources are legal and appropriate and are not the ones who are in any negative list of the central or state government. Then comes assessing the organization's financial practices. The financial practices should be assessed to ensure that there are no irregularities, red flags, or lack of transparency in the financial management of the organization, such as the fraud or financial mismanagement. The organization's risk management policies, including its procedure for handling frauds, should also be evaluated. Next is reviewing the organization structure and internal controls. The internal controls as well as its governing policies and procedures should be reviewed to ensure financial management systems are in place to safeguard its financial resources and assets. It also needs to ensure that the organization's financial policies and procedures are effective, up to date, and is actually followed by the organization in its day-to-day administration and financial dealings. Then is assessing the transparency and accountability. Validate that the organization have a strong internal controls and structured mechanisms in place which ensure transparency and accountability in the accounting systems, financial transactions, supporting documents, and overall financial management. The transparency can also be validated by reviewing the annual reports, websites, and other communications of financial information done with its stakeholders. Then comes taking independent opinions and feedbacks. Consult with the experts and gather feedback and input from the stakeholders, including beneficiaries, partners, donors, and local communities to gain a more holistic understanding of the financial situation of the organization. Look for any independent audits and evaluations of the organization's financial practices, preferably that done by any external agency or third party, and review their findings to get more clarity on the financial position. At last, documentation and recommendation. All the findings and concerns raised or issues identified during the process of financial due diligence must be documented and discussed with the concerned stakeholders who initiated the due diligence. Recommendations for improvements in the areas where the organization is lacking should be provided to the NGO partner, and further course of action should be clearly spelled out in the report. So friends, financial due diligence is also one of the effective tools and practices which can ensure for the donors and other stakeholders that they are partnering with the right NGOs who will use the funds with utmost propriety and will be transparent in all its aspects. Even for the management of NGO, this due diligence can be conducted by their own self to ensure that there are no financial irregularities or non-compliance. All controls related to the financial transactions are in place and the financial management policy is being adhered to. I hope you must have found this video relevant and interesting in your context. For more such interesting and relevant topics, keep tuned to our channel. Don't forget to subscribe it and put your notifications on. You can follow us on LinkedIn, Twitter, Instagram, and Facebook. For any queries, please feel free to comment below or contact us through email. Thank you.